Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 27th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You can see that we've had a significant upward continuation. Here is the low of the election night. We got a big time rally from that area. The 100% expansion target was reached. Now we're well beyond it and stretching to the final 100% target at 23.76.5, which is the 100% target from the 2015 August key range. So amazing rally we've seen here overall, just to kind of get us back to where we currently are. So that tells you again, even if we do have pullbacks, they have been big time buying opportunities still. Despite how strong this has been, this is the current auction, and the current auction is to defend rejections at the previous session's low for a push higher. That has been the way forward. So right now we're going to see how this plays out early in the week. Typically speaking, in a normal market, normal auction, if you're going to reject prices above the previous week's high, that at least leads you back to the midpoint of the previous week, followed by a likely push into the previous week's low. This would then become an area to trap for bulls and seek a return back to prior highs. So that's a typical approach here, and right now we're seeing a rejection currently off the previous week's high price. Previous week's high right here, 23.67s. So any rotation into 23.67 could be an opportunity to defend today for a rotation much lower, perhaps into 23.56, followed by a likely push into 43, rather the 46s. So we could be looking at much more weakness ahead. Now any pullback again will be likely defended by bulls for a rotation back up, as this thing looks to push into 23.76.5 and perhaps into 2400 over the coming week. All right, so let's see here. If we drop this down to an intraday time frame right now, there it is. This is a 512 tick chart. We've seen so far a little bit of weakness here. And this is the previous week's high price right there, and that's 23.67.5. We've seen a double top off of 23.70. Price is now rotated off to the previous week's close price. Nice two-way trade here overall. Any failure to hold 23.62s opens up a rotation perhaps into the previous low down here. That's 23.49. So keep an eye on this level here as prices continue to see rejection above 23.67.5. All right, let's take a look at the crude oil. Here's a higher time frame crude. All right, here we are. So basically, crude oil has continued to hold within this tight range. The range spans from about 51s up to about 55s now. It was 54s. But you can see prices finally starting to establish a little more acceptance above 54s into 55s. I mentioned before, 55.50 is really the level to watch there. 55.50 is a major CLVN in the composite volume profile. So right here, that major LVN, CLVN is a 55.50. That's the real level here that's really going to open this thing up now. And we talked about that level before, because above 54s was kind of fuzzy. You've seen rejections every time around it, but now we're above 54s overall. We are coiling significantly toward the apex of the last several sessions, 5 sessions or so. And if there's any failure to see acceptance above 55 soon, or perhaps 54.50, we could be looking at another downside rotation within the range, back toward 51.71s, 51.67. So if we do get a push back down to that area, it would then be another buying opportunity back up across the range, because that's the current auction we're in. So we're going to watch for signs to see how does price respond here off 54.50s. Any failure to get beyond that level opens up a move back to the previous week's close price. So looking at this in an intraday time frame, there we go. Again, we're watching to see how does price respond above 54.50. At the moment, 54.50 being offered. We had a push above it. Rejection off R3, the PivotBoss band. Another rejection on 54.50 and lower. So if there's any failure, again, to find acceptance above this zone, 54.50, you can see that's been well defended already. We could be looking at a move to the previous week's low. That would be 53.35. So keep an eye on this level. Above this zone, acceptance above 54.50 opens up a return back toward 54.80 and recent highs into 55. All right, let's take a look here at gold futures. Here's a look at gold. We'll bring this up in a higher time frame first, and then we'll drop to the lower. First, the higher time frame shows that this thing has been on a very, very serious advance. We talked about this thing from a while back. This price action during this auction here, big time markdown phase, not able to see a bid at all. So this was a time to sell. Once we got this box reversal here and a push above it here, we were cautiously optimistic for a return back toward 1200, and price eagerly pushed toward those targets. In doing so, we then stretched our final targets out into 1263 with a shot to even see a little bit higher prices if we were to get that target, because here is the actual key range. Up here, that's the election day. So coming back into that area gives you 1268s and perhaps even into the sell-off highs up here into 1300. So we still have more upside here ahead. That's the longer term view. So this has been a spectacular recovery here for gold. Overall, I still believe that we have more upside ahead. So given the current strength we saw the previous week here, a pullback would be a buying opportunity as low as the midpoint of the previous week, and that's right here. That's 1244. So any pullback toward 1244 could still be a great buying opportunity for a move higher, and even as low as that 1240 level. So even if price were to pull back, this would still be a great buying opportunity for a continuation higher. Not sure how much of a pullback we'll get just now, but we should see more strength ahead. If there's any failure to hold 1252s today, that would be your early indication of more weakness. So right now, there's a short-term trading range between 52 and 63, and that's the current little range. And if we drop to the intraday time frame, you'll be able to see a little better here. Here we go. Stretch this out a little bit. So 1252 is down below, right here. And here's 1262. A nice little 10-point range right there. We had a range before that into about 47 to 52, so that's the next range. So right now, we're kind of trading around value. Short term, we have clear HVNs and LVNs in the profile. So if there's any push into 52s, maybe into S3 here, that could be a great short-term rotation back up towards 60 to 62. Should price get up here, it could be a rotation back down, but there's an upward bias. So it's a better idea to buy right now for a continuation higher. The swing buy zone is down here. That's 42 to 40. So should price get down to here, that's the swing buying opportunity for a continuation higher. This right now is the day trading idea, somewhere between 52 and 62 for a push higher. All right, lastly, let's take a look at gold, the dollar. Here's the dollar. We'll look at the daily time frame first. One thing we were looking at to begin the month, and we're going to have another monthly market outlook webinar this week as we shift from February over to March. So we have March 1st coming up later this week. We'll do another monthly market outlook webinar. The last time we did it was here, February 1st, 2017, and we did it at the end of the market day that day, and I mentioned watch this low here. That's the previous month's low. Look for a rejection of that low, because if so, we could be looking at a rally back toward 102s. We got back to 101.75. So a big time move. That was as high as we could go. We had shorter term targets along the way. Once we got up here, the expectation was a pullback could be seen, and this set the stage for a nice impulse range. Once we got a bounce up here, I was looking for a pullback toward 100.5. We got very close before a buying opportunity came in. So right now we have a very clear range, 101.75, 150. The edges are clearly there. We're right at the center of that range. It makes it very difficult to really do anything at the moment. So I'd be being patient for the edges of the range. Should we come up here, another selling opportunity. Should we come down here, another buying opportunity. Until that happens, you got to kind of be safe with it. If we drop on the intraday time frame, again, given the fact that we are kind of at the center of the range, today could be more of a trading range type of day. early on before direction begins to be seen for the week. And so at the moment, you can see it's very, very tightly coiled price action here. 101's basically here, or yeah, 101 here, 101.20 here, and that's kind of the range at the moment. So got to be careful with DX overall early. I think it's a fade the edges type of market with 101.20 here as the outer edge. We could see a little bit of movement down here, back up. Eventually, we'll start to get a move to the outer edge for a swing execution attempt. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and happy Monday.